Good morning and welcome to the BDO webinar on the COVID-19 stimulus measures for Queensland. My name is Sharnie Mitchell and I'm the Mining and Resource Tax Partner for the BDO Brisbane office. So the purpose of today's webinar is just to provide an overview of all the potential stimulus measures that the Queensland mining industry may be able to access, along with some points on measures that in my view may still need some more guidance from the ATO regarding eligibility, but we'll come to that shortly. So we'll touch on the JobKeeper payment. I know there's quite a few questions around that one. The cash boost, payment holidays that are being offered by the ATO and state governments, and some other items that I thought might be of relevance. So we will have some time at the end, hopefully, for questions, but if we don't end up with time, please feel free to email those through to me and I will endeavour to answer them if I have the information. So on Thursday, the 9th of April, the JobKeeper rules came into force, and these rules provide for a $1,500 payment per fortnight before tax for each employee an employer keeps on over the next 6 months. So the JobKeeper will be available to full and part-time workers, sole traders, and also long-term casuals if they meet the requirements. So we'll touch on sole traders shortly, as we've had a few questions in relation to this for directors and contractors. The first payments will be made in mid-May, and that will be for the fortnights commencing 30 March and 13 April. The top-up amount won't be subject to superannuation guarantee, and the whole payment will be subject to pay-as-you-go withholding. So an employer is eligible where before the end of the fortnight, they are an eligible employer. They employ eligible employees. They pay gross wages of at least $1,500 to that employee for that fortnight, and they have notified the ATO of their intended participation and completed the relevant online applications, which I will go through in a moment as well. It should be noted that for the first 2 fortnights, the ATO will accept late payments. So that provided you've paid an employee at least $3,000 during the month of April, the ATO is fine if you've had to make a top-up payment, because the first fortnight is obviously already ended, so there will be the ability to top up for April. So the turnover test, we've had quite a few questions on this one. If you are an eligible employer, you will need to satisfy either the decline in turnover test or the alternative test. So to satisfy the decline in turnover test, you will need to show that your business has aggregated turnover in both the current and previous years of less than $1 billion, and you estimate that your GST turnover has fallen or will likely fall by 30%. Or your business has aggregated turnover that's greater than $1 billion and your estimated GST turnover will fall by at least 50%. So once you have established whether your business is subject to either the 30% or the 50% test, you then can look to determine if there's been a decline in GST turnover of at least that applicable percentage. So the decline in turnover test is on an employer entity only basis. So if you're part of a GST group or a broader corporate group, you ignore that completely for the GST turnover test. This is on an entity by entity basis. So this can mean that you will have some entities in your corporate group or GST group that are eligible for JobKeeper and some that aren't eligible because they've not seen a decline in their GST turnover of 30 or 50% on an individual entity basis. So GST turnover takes its meaning from the GST Act, and it's defined as taxable supplies. It excludes input tax supplies, supplies for no consideration, supplies that are not in the course of ordinary enterprise, or supplies that are not connected with Australia. The ATO have said they will be releasing more guidance regarding this in the coming days, so please make sure that you've registered your interest with for JobKeeper on the ATO website. and make sure you've signed up to BDO advisory messages because we will be updating regularly. So I think a key part of this decline in turnover test is when you actually test it. So there has been quite a bit of confusion in relation to this regarding monthly BAS lodges versus quarterly. So whether you lodge as a monthly or a quarterly, you are still able to use one of the three tests to determine decline in turnover. So you can use your GST turnover for March 2020 as compared to your GST turnover for March 2019, or your projected GST turnover for April 2020 with your GST turnover for April 2019. Or you can use your projected GST turnover for the quarter starting April 2020 as compared to the quarter in 2019. So if you're going to do this, you should ensure that you've documented your testing for the decline in turnover test, just in case you're asked any questions by the ATO. Also note that once you're in the regime, you're in until the 27th of September 2020. There's no requirement to retest. So if you satisfy it using that quarterly test now, then you're in until the 27th of September, regardless of whether revenue picks up in July, etc. So there is also an alternative test, which the Commissioner is yet to release any information on. The rules state that the intention is to provide for instruments addressing classes of entities, such as where there's atypical performance. So if it's a newly started business, you've had acquisitions, variable turnover. The explanatory statement that came out with the rules on Thursday did provide for an example for agriculture where they're allowed to go back an extra year because of drought. However, it still has not addressed the key part of what if you don't actually have any GST turnover, which is extremely relevant to those companies that are in the exploration phase. So we're yet to see what the Commissioner's intention is for that, how they're going to test those entities, whether that be through a decrease in investment, reduced access to sites, or some sort of reduction in expenses. Once we have that information, we will be publishing it on our website and also emailing all clients that are registered for mining updates. And ATO have said that they are expecting to release a lot of information this week on the ATO website, so make sure you're following that as well. So contractors. We have been fielding a few questions from directors of small listeds regarding JobKeeper and whether they can access it. You can access it if you are a director that you engage as a contractor, or other contractors and consultants can also access it as well. So the requirement for this is that you are operating through either a company, as an individual, a trust, a partnership. You need to have had an ABN on the 12th of March, and you need to satisfy either the assessable income test, which is that you have had assessable income from carrying on a business on your 2019 tax return that was lodged by the 12th of March 2020, or you've notified the ATO of a taxable supply through a BAS lodgement between the 1st of July 2018 and the 12th of March 2020. The rules do say at a later time allowed by the ATO for the taxable supply. So we're thinking that this is because some accounting programs that generate BASs may not include a GST-free supply in the G1 disclosure, but technically should include it. So we think that this is allowing entities to go back and review and ensure that their BASs have been prepared correctly. So the process for accessing JobKeeper program. So the ATO is now updated as of yesterday. They have released information regarding the process. It's extremely tight timeframes for when you have to do this. So employers really need to start now organising everything, because there's going to be a lot of paperwork involved in the process. So the starting point is you need to determine firstly, if you're an eligible employer, which we're still going to need guidance on for some clients if they don't meet the normal circumstances for the GST turnover test. The next step is that you need to look at your employees, and you need to determine which ones are eligible employees as of the 1st of March 2020. Once you've done this, the ATO's now released their JobKeeper employee nomination form. So this form needs to be completed by both the employer and by the eligible employee. And you cannot go on to the next step until this form has been completed by both parties. So once you've got all those forms back, then you can notify the ATO of your employer election to participate in the JobKeeper scheme. This election will be open from the 20th of April, and you do this via your registered tax agent or through the business portal. And when you're doing this, you'll need to provide your bank details, and you'll need to provide an estimate of the number of employees who are going to be eligible for the first 2 fortnights. So then next you're going to have to make sure your payroll's set up properly and ensure that for those first 2 fortnights you have paid at least $3,000 to eligible employees. And then from the 4th of May, this is when you need to confirm with the ATO your eligible employees. So on the 4th of May, the ATO is going to open up the ability to then confirm all employees that are eligible, and then every month you're going to need to reconfirm this. So you can do this through Business Portal or you can do this through your registered tax agent. Okay, so the next one that I wanted to talk about is the cash boost. This provides for a tax-free payment to eligible small and medium-sized enterprise. Employers will receive a minimum payment of $20,000 up to $100,000 over the current and next financial year, provided they are still employing entities. So the payments are automatic, with the first payment to be received within 2 weeks following the due date of the March 2020 BAS, being the 28th of April. So note that the payments are not going to be brought forward. If you lodge your BAS early, you're not going to get the payment any earlier than the 2nd week of May. So to be eligible for the payment, an employing entity needs to show that they had aggregated annual turnover under $50 million. They held an ABN on the 12th of March 2020, which continues to be active. They made eligible payments that they withhold from, so salary and wages, director fees, compensation payments. And they satisfy either the assessable income test by having lodged a 2019 tax return by the 12th of March, which shows assessable income from carrying on a business, or have made a GST taxable, GST-free or input taxed sale since 1 July 2018, which is on a BAS lodged before the 12th of March. So once again, for a lot of junior explorers, their 2019 tax return has likely not been lodged because it would have a due date of 15 May. As such, they'll need to rely on the relevant BAS having been lodged with a GST taxable, GST-free or input tax sale. That being said, the law does state that the Commissioner may allow additional time in exceptional circumstances. So we would recommend that if you haven't lodged your 2019 return, you endeavour to do so as soon as possible. You should also review your BASs to ensure they've been completed correctly. If you haven't received a payment by mid-May and you believe you're eligible, you should contact either the ATO or your tax agent and get them to follow up, because the ATO will be taking calls on this cash boost because there's going to be entities that might have had annual turnover of 50 million for the 2019 year, but aren't going to have it for the next year, so for this 2020 year, and are still eligible for cash boost. So I've just got a couple of examples of how the cash boost is going to work. So this example here is for a monthly BAS lodger. And as you can see, the way the payment works is that you will receive, on lodgement of your March BAS, 3 times the PAYG withholding that you've remitted, capped at $50,000. And then each month following that up until June, you'll continue to receive the equivalent of your withholding up to $50,000. And then for the additional payment, which you're eligible for in June, provided you continue to be an employer, you will get the total of what you've received over March to June will be spread across June to September. So you can end up with 2 payments in June in some instances. And so for a monthly, this just shows an example of a monthly lodger where they cap out of the 50,000 a bit earlier than June. And then this one here shows a quarterly lodger and how they can expect to receive the payments. I just would like to note though with quarterly lodgers from a planning perspective, cash flow wise, that the ATO is allowing quarterly lodgers to switch to a monthly BAS so that they can access GST refunds earlier. So that could also be a way to pull forward some of your cash boost payments into an earlier period and receive the cash more regularly instead of quarterly. So moving on to payment deferrals. So this is just a summary of what the ATO has announced that they will let you defer. So currently you're allowed to defer until the 12th of September the payment of tax amounts that are due through your BAS, including instalments, income tax assessments, FBT assessments and excises. You can also, as I said before, you can change from a quarterly reporting cycle to a monthly reporting cycle. If you're paying PAYG tax instalments, you can vary this down to 0 for the March 2020 quarter, and you can also get a refund for your September and December quarters. You do this through your March BAS, and by completing, once you vary it down to 0, you just continue to follow the screens and then you'll add an amount in to get a refund. So this ATO assistance is not automatic. You need to contact the ATO to request the assistance, and if you're eligible, the ATO will tailor a package for your needs. I would also add that the ATO are also allowing a deferral of pay-as-you-go withholding at the moment in exceptional circumstances. So for large withholders, it's done in writing with the large groups division of the ATO, and you need to provide sufficient information regarding your financial hardship as a result of COVID-19. For other remitters, you can do this over the phone with the ATO. All lodgements still need to be made on time unless you've agreed otherwise with the ATO. These initiatives are just payment deferral initiatives. So these next payment deferrals or holidays are from the Queensland OSR. So for businesses with grouped national payroll of less than 6.5 million, they're eligible to receive a refund of the November and December payroll tax and a payroll tax holiday for January to March 2020's payroll tax. So if you're eligible for this, you should have received an email already from the OSR telling you of this. If you haven't received that email, I've put the website on the slides. You need to go to that website and you can register for the refunds, and you can also register for the payroll deferrals as well until 14th of January 2021. For those businesses that are above 6.5 million, and they also need to show that they've been directly or indirectly impacted by COVID-19, they're able to apply for a refund of the January and February payroll tax. So applications for this are not automatic. You need to do it through that website that's on the screen. And just be aware that this could be subject to an audit. So we recommend that you document with some sort of internal memo how you were impacted by COVID-19, should the OSR ever ask. There's actually no thresholds or other guidance that's been released in relation to what it means to be impacted. So just some commercial judgment when you're applying for it. Also, all businesses that have been affected are able to defer the payment for the rest of the calendar year for their payroll tax. So that's until the 14th of January 2021. And you need to apply for that using the website that's on the screen. So the banks are also offering some 6-month loan repayment deferrals, and they've increased that from 3 million to 10 million in total loan facilities. So it's providing access to a few more businesses now by lifting that up. So if you're interested in that, you should contact your bank directly to get access to that. So just some other announcements that I think will be of interest to the industry. The first is the instant asset write-off. So whilst a lot of the industry get the benefit of deducting the cost of an asset in full in the first year through the various expiration provisions, this could be of interest to those entities that don't get access to it. So maybe they're in production phase or the asset hasn't been purchased for exploration or prospecting. So this threshold has increased the asset threshold from 30,000 to 150,000, and the aggregate annual turnover has also been increased from 50 million to 500 million. So if you have turnover less than 500 million now and you want to buy an asset for 150,000, you can claim that as an immediate deduction up front. And the threshold applies on a per asset basis. So eligible businesses can immediately write off multiple assets using this. It will revert back to the $1,000 and the $10 million test on the 1st of July. So if you're planning any CapEx spend and you want to bring forward some deductions, if you're taxable, then we would recommend that you make those purchases and install ready for use by 30 June 2020. So this is another good one that if you want to spend more than 150,000. So this one here allows businesses that have aggregated annual turnover of less than 500 million, they're allowed to deduct 50% of the cost of an eligible asset, provided that asset was purchased between the 12th of March 2020 and first used or installed by 30 June 2021. So there's no asset value for this one. It can be the asset can cost as much as you like. There's no cap on it. You can also apply the existing depreciation rules to the remaining balance. So you could get an eligible asset and get an immediate deduction of 50,000, plus in the same year generate a Division 40 depreciation deduction calculated under normal depreciation rules on the rest of the 50% balance. So this just brings forward your depreciation deductions. If you're in a tax paying position, this would be quite useful to manage cash flow for the next 18 months if you've got some CapEx spend coming up. So some other announcements. The Queensland State Government is also providing business loans of up to 250,000, which are interest-free for the first 12 months and low interest for 10 years. Applications are made through the QRider website and eligibility requirements are on the QRider website. If you do have any questions in relation to these or anything else, feel free to visit the COVID-19 BDO page, as there's information on this process along with contact details of specialists in our firm that can help you with your applications and answer any questions you might have. We've also got some changes for apprentices and trainees. So eligible small employers are able to get a wage subsidy of 50% of an apprentice or trainee's wage for up to 9 months, up to 21,000 per apprentice. So this will be paid quarterly, and you apply for this through your current provider, and registrations are open now, so you should be contacting them so you can access this subsidy. We've also got lastly, we've got some changes to the FIRB investment regulations. So from the 29th of March, foreign investment into Australia that is subject to FIRB laws will basically always require approval whilst we're in this situation. So the monetary screening threshold has now been reduced to $0, and the time frames for reviewing applications have also gone from 30 days to 6 months. So I've also got, I'll just hold on the questions for a moment. We've also got some other state initiatives which I've put in here because you might have employees and operations in other states where you could access some of their incentives as well, because there's quite a few good holidays from payroll tax and refunds of historic payroll tax in all the other states. So you should have a look at that. It gives you some guidance on how to apply for it. We will send the slides around and there's links in there for the application process. There's also some other specific measures which I've put in there which might not be relevant to the mining industry, but there's some there that are from a personal perspective, so they might be of interest to you as well. So all the states are in there if you wanted to take a look. If you have any questions, just please let me know. So that's the end of the presentation. I was hoping that we would have had more information on that JobKeeper and how it would apply to exploration companies, given, you know, a 30% reduction in zero is still zero. So I'm not sure how we show that at this point in time. I know we've made a number of applications to the ATO and raised numerous questions asking how they're going to deal with it, and we're yet to hear back on that. So we will definitely communicate if we do hear anything else, because I know there were some questions raised by attendees, and I'll email you directly once I know. So are there any other questions out there at this time? Okay, thank you for your time. If you do have any questions in the meantime, just send them through to me and I'd be happy to answer them.